Kofi Bruce knew he was taking on a tough job when he was named CFO of General Mills. Then suddenly, it got a whole lot tougher.
I had about 6 weeks in role before the pandemic really hit.
Financially, the company has held its own, despite a host of headwinds. But there's a lot more to this story.
None of the events that have really transpired in the 4 years since I've been in role have been scripted. They don't fit normal patterns.
We've been through a lot, a global pandemic and social unrest and wars, record amounts of inflation, supply chain disruptions.
This entire period has been all about anticipating future scenario planning, adaptability, agility, responding to events in the moment, playing both the short and the long game.
He's good at the math. I mean, he is a good finance guy. But, more importantly, he's a great leader. He's resilient. He deals with ambiguity well. I don't think the job of a CFO has ever been more challenging, and I don't think it's ever been more important to have a good one, and we have a great one.
Kofi Bruce has helped lead General Mills through a period of continual shocks and surprises, all without losing focus on the big picture.
We've not slowed down in this time period. We've advanced capabilities such as digital and technology, and we've made significant investments or reinvestments back into brand building, even in this period of disruption. I spent a lot of time thinking about where are the bets we need to make to set us up to succeed when we either get out of this period of disruption or even over the longer term. What do we want the company to look like?
Strategic thinking is second nature to this CFO. In fact, he's taken on a second title, Interim Chief Strategy and Growth Officer. It's a lot of responsibility. It's also a good fit.
He can definitely do both of those tasks. Now, it's only interim because I don't want to burn out Kofi. I mean, we need Kofi for the long run. But he could just as easily be a Chief Strategy Officer as he is a Chief Financial Officer.
Finance and strategy have a very close interlink, right? Strategy is all about sort of the long-term shape of the organization's capabilities, its adaptability, and kind of what are the long-term goals. Finance plays a lot in the short and the intermediate term, and so the overlap between those two roles, if they are not linked, it just isn't going to work for the organization.
With more than 100 brands sold in more than 100 countries around the world, General Mills boasts a powerful product lineup, anchored by 9 brands that each generates over $1 billion in retail sales. The company's growth strategy begins with a commitment to support and promote its brands.
Our first job is to intimately understand and anticipate the consumer's needs. We've invested back into brand building, advertising, digital media, to talk about features and talk about how our products interact with consumers.
Does that advertising and marketing spend, does that need to be materially higher on a relative basis now?
Yeah, well, it is actually. We've increased it almost 40% through the past 4 years.
Investments in product innovation and marketing help General Mills drive growth across its portfolio. Periodically reshaping that portfolio is also an important part of the plan, with an always-on approach to M&A.
As we look to accelerate our growth, part of it is acquiring assets that are growing faster than our current portfolio while maintaining true to the capabilities we have as an organization. But part of it means divestiture, letting go of businesses that might be better suited in the hands of somebody else that are just not going to be priorities for us.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
We've seen the rise of pet ownership significantly through the pandemic. People aren't pet owners anymore, they're pet parents, and so these pet parents are treating their pets the same way they think about their children.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Not all global trends are so clearly positive. In the wake of the COVID pandemic, across the food industry, producers and consumers are still adjusting to pressures that spiked prices and knocked traditional spending patterns out of whack.
We've had a period where we've gone through once in 50-year inflation, right? It's impacted our cost structure. We're up almost 30% in our cost of goods sold just over the past 2 years. If I dial back to the beginning of the pandemic, almost a third increase in our cost base, almost $3.6 billion, give or take.
Even though high inflation, those historic highs we saw in the summer of 2022, have passed, they're still behaving and really weighing on consumers. When they're shopping, they're comparing prices more frequently. They're buying generic instead of name brand. They're even buying fewer items overall.
There are some consumers that are trading down, so we're seeing that. We didn't see it early in the inflationary period, but we're seeing it more now than ever.
And consumers are feeling the pinch of inflation. So even if inflation is coming down, that doesn't mean it's deflationary. We're in this dichotomy where in some ways we're settling into a new normal, in other ways it feels very abnormal and very stressful for consumers.
From 2020 through the early months of 2024, food prices soared 25% in the U.S., well above the 20% rise for consumer prices overall. Food inflation concerns dominated headlines.
Every time Ohioans go to the grocery store,
the Senate held hearings on shrinkflation, calling out industry players for reducing the size of their products without actually reducing the price. It's a challenge many companies have had to address.
I think consumers understand that inflation is very broad-reaching and certain costs have gone up. Consumers want transparency. Let me know what's in my food, how did it get here, how was it treated, and if you are going to shrink a pack size on me, it'd be nice to know that ahead of time, or at least some visibility to that.
There's been a lot of talk about shrinkflation among a lot of the packaged goods companies. How do you go about creating a more cost-effective, both for you and for the consumer, but doing it in a way that's a little more transparent?
We have to do the things first that dampen the impact, right? That don't impact the consumer. If we do our job right and we're driving productivity, that takes some of the sting out, because that's costs that we don't have passed back, certainly ultimately to the consumer. But the other job is to make sure that if we've got consumers that are looking for value, that we're hitting them with the right promotions and the right incentives, as well as we've got pack sizes to kind of meet their price point expectations. That's a big part of the job.
Managing costs and maximizing productivity is central to Kofi Bruce's role as CFO. At General Mills, that process touches every part of the organization.
We call it holistic margin management, or HMM. We generate about roughly 4% a year, or $4 billion over the last decade, 5% this last year. So our first line of defense is to be as productive as we can be to keep costs as low as possible.
It's focused on eliminating waste pretty much everywhere we do anything to produce, touch, or distribute product. It's multifunctional. We all play a role in driving out cost in ways that don't impact the consumer.
The supply chain has a big role in that, so does R&D, our business leaders do, but really our CFO is the one who oversees all of that, because we want to make sure we're getting the value out of our HMM efforts that we need to get to, and then helping me and the business leaders decide, okay, now that we've generated that savings, where do we apply it?
With a strategic mandate to invest in brands and make deals, a strong balance sheet is an absolute must. It's a source of confidence at General Mills.
Our balance sheet is in a great place, and our net debt to EBITDA ratio is a little bit under 3. It offers up the optionality for us to create shareholder value in a lot of ways.
One of the things we track very closely is our free cash flow generation or conversion. So we've been consistently on a rolling 3-year basis at or close to 100% or more of every dollar of after-tax earnings converted into free cash flow. We've got a 125-year history of uninterrupted dividends to shareholders. And our job over the long term is to grow roughly in line with after-tax earnings growth year in, year out, and to support that with that strong free cash flow generation.
Coming up, Kofi Bruce takes me down to the General Mills test kitchen and tells me how data science has supersized innovation across the company.
We've gone from a place where we were just doing a handful of models, in the thousands on a monthly basis, to now we're close to 6 million.
This is Bloomberg. General Mills CFO Kofi Bruce didn't grow up dreaming of a career in corporate finance. He studied international relations at Stanford, and when he finished his bachelor's degree, he thought he knew where he was headed professionally.
I was on my way to the Peace Corps. That's what I wanted to do. I wanted to be actually an ambassador, go into the Foreign Service, work for World Health Organization, something like that. I went through the Peace Corps interview process, and they said, we need about 10 months to place you. And I took a job in mortgage banking, and ultimately that led to me finding that I had skills and that were useful in this context. And I actually enjoyed working in a corporate context, and that slowly turned into, well, maybe I'll go to grad school later and just skip the Peace Corps. And then ultimately, after 3 years, I went to business school, and that kind of started the journey.
After earning his MBA at the University of Michigan, Bruce started his career in finance at Ford. From there, he moved to chemical manufacturer Ecolab before joining General Mills as vice president and treasurer in 2009.
I actually like being in a business where the product is something I could explain to my 5-year-old kids when I joined this company. They eat Cheerios.
It's simple to explain the concept of Cheerios, but what keeps Cheerios fresh as a brand, a billion-dollar brand, is far from simple. It takes a massive investment in innovation. General Mills has fortified its staff with data scientists.
We're up almost 40-fold in the number of data
40-fold?
40-fold.
Wow.
The number of data scientists in the organization since 2018.
Now, you could say that data is the secret sauce here in the test kitchen. General Mills has always used consumer insights to guide product development. Now, data analysis and AI tools have been added to the recipe.
We've been applying AI and machine learning throughout our entire business. So whether you're in the finance function, or whether you're in supply chain or marketing, or whether you're in research and development, really across the spectrum.
Our entire innovation process has really dramatically changed in the past 10 years or so. We've gone from a place where we were just doing a handful of models, in the thousands on a monthly basis, to now we're close to 6 million models running on a monthly basis, 500 million different predictions across various parts of the organization, including supply chain. Also leveraging those tools on the marketing side to help us iterate, for example, on campaigns, marketing ideas, targeted media to get the right message to the right consumer at the right time.
So has that sped up the R&D process?
It helps us everywhere. For example, we've been able to reduce waste in our manufacturing sites, where we use these predictive AI tools enabled by data to find opportunities in all parts of the production process to reduce waste. And we found in plants where we've employed these tools, we've seen a 20 to 30% reduction in waste. It's almost $20 million a year of reduction in waste just from these data tools.
General Mills is generating returns on what Kofi Bruce calls foundational investments in data and technology that began in earnest in 2020. It's paying off with new products.
It actually starts upstream with all of our consumer market intelligence organization giving us information on what relevant jobs we need to be doing for the consumer that aren't being solved right now by the products that are in market. It leads to things such as opportunities to improve the product itself, if it's our existing core product, to line extensions and new flavors, and sometimes to entire new categories.
When you're making these R&D decisions, what's the general time frame that you look to for creating something? Is it 5 years, 10 years? Like, what do you look at?
No. We're always looking for a much shorter iteration cycle. I mean, obviously some ideas do take longer, but we're looking to be able to get ideas to market, hopefully a year or two or less.
Not every General Mills innovation follows the same pathway to market. The company invests in ideas at every stage of development.
The core of this recipe is a product that came up through our disruptive growth group. We've got a team called G-Works, which is our internal incubator. And it's really about finding opportunities to serve the consumer in ways that aren't met presently in our core businesses.
Carpe Diem is a low-carb, whole wheat pasta designed to taste the same as regular pasta, but with more fiber and fewer calories.
The thing with disruptive trends is you don't always know in the early stages. Maybe there's an idea or a job that isn't necessarily being done well by all the products in the market, and there's an insight, usually a nugget of a consumer insight about what that job is. And you need to play it out a little bit. So our entire disruptive growth team is about sort of playing some of these ideas out. If you miss certain key trends in the early stages, if you aren't clear about what's making those small disruptions in the early days successful, then you can end up with a large-scale disruption to your business.
I might not fit squarely in Carpe Diem's target audience, but I wasn't going to leave the test kitchen without a taste.
It looks very delicious. I think that's definitely a hit.
Yeah.
Coming up, why General Mills sets ambitious goals for sustainability and why the CFO takes them very seriously.
Some of these things may not have a measurable impact in the near term, but they certainly will have a measurable impact in the long term if we don't do them. And our job is to balance kind of both of those challenges.
This is Bloomberg. General Mills can trace its history back to a single flour mill built in 1866. The company officially formed in 1928 through the combination of several competing mills. Since then, it's grown and thrived by anticipating challenges and quickly adapting.
We've been successful because we've changed, not because we failed to change.
Right now, the entire food industry is dealing with a novel challenge, the rise of weight loss drugs like Wegovy and Zepbound.
I think the interest in weight loss drugs is here to stay. We survey consumers and see consistently that 30% of consumers are interested in weight loss drugs.
There's not an impact on our business today, positive or negative, frankly, with the weight loss drugs that have been launched. As you look over the next decade, most experts would say there'll actually be a minimal impact.
You're not making any major changes to the business specifically around the weight loss.
We have not made any major changes to the business at this point, nor does it warrant it.
In the center of disruption is always opportunity, right? So yes, it's a risk, but it's also an opportunity to differentiate. We don't necessarily get to pick the macro factors that impact our business. Our job is actually to figure out how to respond to them.
General Mills has been an industry leader in recognizing and engaging the threat of climate change. It's made environmental, social, and governance goals a pillar of its corporate strategy, commitments that come with financial costs.
Consumers expect us to take care of the environment. As a food company, that's what they expect. And so our commitments are about regenerative agriculture, about lowering greenhouse gas emissions, and then about recycled packaging. We're really proud of the progress we've made.
Sustainability and ESG efforts are really important to establishing consumer trust as well as differentiating brands. Nearly 7 in 10 consumers say that they're likely to buy a product, a food and beverage product specifically, that prioritizes sustainability. And that's more so than any other industry we surveyed on.
How much do investors care? There's been a lot of talk about ESG, its purpose, and its role in a for-profit company. How do you sort of square that circle when an investor says, I don't care about this, I just want you to make money?
If I take a short-sighted view, I don't need to care about climate change. That's something that doesn't impact our business. And I don't do the things that we're doing on regenerative agriculture, and they don't set goals around, say, recyclability on packaging. Ultimately, those things will come back and redound on the business and impact our ability to maintain supply. Sooner or later, they will also drive up costs. Some of these things may not have a measurable impact in the near term, but they certainly will have a measurable impact in the long term if we don't do them. And our job is to balance kind of both of those challenges.
Kofi Bruce sees a responsibility to influence another long-term trend across American business, the increase in ethnic and racial diversity among chief financial officers.
I helped start a group with several other public company CFOs and Russell Reynolds, specifically to help build out bench for future public company CFOs amongst African American employees. And I've seen the numbers certainly tick up. And I think that's important. As people look up in organizations, it's important to see people in your function, if you're, say, a young financial analyst, that look like you or maybe come from a slightly different background than maybe what they've traditionally seen in roles like mine.
Taking the long view while keeping tight focus on detail seems par for the course for Kofi Bruce. I asked him to elaborate on his vision for the future.
What opportunity for General Mills over the next decade excites you most?
There's no denying, as we look at our pet business globally and the trends that are supporting pet growth and pet feeding and treating growth globally, that there's tremendous opportunity for growth on that platform. That probably somewhere near the very, very top of our global priorities. And I think we've got a strong hand to play here in the U.S. with Blue Buffalo. There continues to be opportunity for us globally.
What's the challenge for General Mills over the next decade that keeps you up at night?
The challenges keep shifting. I think that the biggest challenge is probably the same central challenge we've always been dealing with. The consumer and what's driving their behavior, what's on their mind, and the trends that are shaping how consumers interact with our food. Our job at the end of the day is to make sure we're staying close to the consumer. We understand and anticipate their needs. That's the thing that if we don't get right, it takes years sometimes to fix it in certain businesses.
How do you see the role of a CFO changing over the next 10 years?
I think it already has changed tremendously, even in the short time that I've done it. You have the standard complement of things that you expect from a CFO role around, the management of external investor relations, the management of the finance function and all the processes that sit in it. What I found in this environment, there's an impact you can have on the enterprise and the culture. People, and certainly in this period of uncertainty, have looked to the CFO as part of the senior leadership team to give clarity of not only direction, but to make sense and meaning of what's going on in the external environment.
What's the hardest part of being a CFO?
Usually for me, it's remembering which audience I'm speaking to and what I can say in that context. As CFO, you're always privy to insider information, some of which you've shared in certain contexts. Obviously, with a public-facing role like this, you have to be careful about what you say and when you say it externally, and you're always in front of multiple audiences trying to figure out where those anchor points are.
What's the best advice you would give to someone who just got promoted to CFO today, day one on the job?
Yeah. I think the best advice is to go into the job with a certain level of humility.
Be unveiled in the course of that.
100%. We've got about 90 more questions, frankly, before we get to Monday. So the things that have gotten you there are essential but not sufficient to help you succeed. I think plugging yourself into the organization, embracing some of those other parts of the job where you really can have an impact on the organization's culture from your chair. I think the role around educating and helping people in the organization understand and filter what's important externally to what they do on a daily basis is critical. And the CFO is probably one of the only jobs that can do that.
I'm Romaine Bostick. This is Bloomberg.